Consumer confidence in Canada just dropped to its lowest point in over 2 decades, and here in Vancouver, buyers have vanished. All it took was Trump mentioning Canada as the 51st state and we saw the pause. But here's the truth no one is talking about. While buyers are scared, permanent resident growth is still surging and non-permanent residences, which are renters, are pulling back. That means today's uncertainty is tomorrow's opportunity, and this might be the last quiet moment before we see a wave of buyers re-entering the market. In this video, I'm going to walk you through the exact data that both banks and institutions are looking at to help prognosticate the market for your benefit. We're going to go into the reasons why consumer confidence has dropped so low and talk about some details no one else is really speaking about, that getting into the immigration numbers, getting into some of these other items that showed that there was such a strong appetite in the end of 2024 for buyers to enter the market, and not to freak out because there is a pause. But in this chaos, there's opportunity, and whether you're an investor or a home buyer, this is great to jump into. And some other financial data here at the end. There is new data that has come out to show that mortgage costs in Canada are actually dropping because wages are in fact going up here. Canadians are making more money. So there is a soft spot here in the market right now in Vancouver, and I want you to be able to help this with your due diligence. My name is Kyle Mark, your Vancouver realtor. Whether you're looking to buy, sell, or invest in my beautiful city, Vancouver, make sure you book that discovery call with me. It's in the description below. You can also download my home buyers and home sellers blueprint for free as well. So let's get into these charts. The first charts we're going to dive into here are the consumer confidence indexes, here for the small business and here for the population of Canada. And this is a really interesting chart, and it tells us a lot of what's going on here, and it's quite surprising and shows the seriousness of our economy and how Canadians are feeling right now. This data goes back to 2002, and what you can see here, we are now at the lowest marker in consumer confidence in the last 23 years, and that's really saying something, because right here is our friend COVID. We are below that marker, and you all remember how isolating and how difficult that time was. Businesses were shut down, we couldn't go outside, and the world, I found, was a lot harder back then. But despite those incidences, we are much lower in terms of that consumer confidence, which is quite surprising, and it looks like we are continuing to drop. The last big drop here was the 2008 financial crisis here, 2008 and 2009, and again, we are putting that to shame in terms of where we are at. We're almost getting down to the baseline here of 40. On the small business side here on the right, you can see that there was starting to be some meaningful gains here as we were starting to get out of these high interest rates and rates were starting to drop. But this really coincides with what President Trump has done in terms of these tariffs to Canada and to other countries abroad, and shows that the state of the economy and where we are at as a country is at. We are both at the lowest levels, both on the small business side and the index of consumer confidence in Canada, and both of these, both business and consumer confidence, both hit their lowest levels in March. Looking at those charts should give us a pause for concern, but if you're someone who's looking for opportunity, this is exactly when people should be getting into the market. It is when people are making emotional decisions and are not looking at the facts, and a reason to be optimistic. And I wanted to show this chart here. Obviously, both those charts paint a very dreary picture of what's going on, but we know that when there is chaos, there's lots of opportunity. Go back to 2008 in that financial crisis, there was a lot of people who did very well with real estate purchases, not only locally but internationally as well. Whenever there is so much movement, people get emotional, people get very fearful, and then they get away from their fundamentals. And I think there is room for optimism, and I think if you are willing to get into the market right now, this is a great time to do it, especially on that detached side of things. And this is an interesting survey. This was done by the Bank of Canada here at the end of last year, and this is the home buying intentions and how they jumped up big time in Q4 of 2024. So right here it says survey data from the Bank of Canada show a marked increase in home buying intentions in the Q4. Notably, among renters, where nearly 20% expect to purchase in the next year. So pink here is Q3 of 2024, green is Q4 of 2024, and this is existing homeowner here and renter. So we can see that there was a big increase in terms of those intentions. At the end of 2024, interest rates were continuing to drop. There was a schedule of them dropping, obviously getting more buyers confident in being able to get into the marketplace. So these people aren't just going to disappear. They're definitely putting a pause on things, and this is why it's such a great time to get into the market now, just due to the fact that there's so much inventory, there's not a lot of competition. And I hear it all the time from people who are waiting for interest rates to drop or making some excuse. Why do you want to wait for interest rates to drop when more people come in to make more competition in the marketplace? Same thing right now. If so many buyers are putting things on pause, why do you want to wait when everybody else wants to come to the market. That's just going to increase competition. You should be zigging while everybody else is zagging, and this is definitely a time to do that right now. The next chart we're going to look at here is the population growth numbers. Before I get into those financial numbers showing how Canadians are saving more and making more money, which is going to give them more confidence to get into the market, I wanted to get into some of these population numbers here because I think there's some misinformation here, or people just not understanding what is being put out there by the news media. And yes, we know that population is starting to decline, and there's some policies that were put into place in terms of visas and capping non-permanent residences. But there needs to be a delineation between the non-permanent resident growth, which is orange, and the permanent resident growth. And the reason is orange essentially represents renters. These are people that are not allowed to purchase in Canada because we have a foreign buyer ban. And that is why we're seeing the rental market so extremely soft right now. There's been such a focus on purpose-built rentals, which I've outlined in many of my previous videos, but we have an increase in purpose-built rental stock to market. Then we have a decline, and a pretty sharp decline, in the non-permanent resident growth. So we have a lot of inventory out there, which has dropped the pricing for rentals. So if you're looking for a rental and you're watching this, great time to lock in for a 1-year lease. The blue, however, is what we're looking at when it comes to resale properties. And you can see the permanent resident growth is still essentially at all-time highs. It's been at all-time highs, since 2022. And these are the people that can actually purchase properties. To put these numbers in perspective, we can drop down to the permanent residence admissions, and you can see, just like this chart here, since 2022, there's been essentially year to year between 400 to 450,000 permanent residence admissions every single year. And the bulk of those individuals usually go to the bigger cities like the GTA in Toronto or here in Vancouver. And that is another reason why people ask who is being able to afford some of these properties. It is individuals that have money, that have these permanent residence admissions accepted, and then they have the resources to get into the market. Finally, as we wrap this up, I want to speak about how affordability in housing is improving, and just coming here into some commentary here. And finally, affordability is improving despite what you may think. One commentator states here, people don't buy houses, they buy payments. We're now definitely past the peak in unaffordability, and the only question now is how quickly things will improve. He continues that if rates move the way he expects, by the end of the summer, we will have seen a 30% decline in that number since peaking in late 2023. You can't tell me that won't move the needle on demand. And I completely agree. And as we open up these charts here, monthly mortgage payments on a typical home, blue is Toronto, orange is Ontario, black is the average. They are all falling in step here, in a peak when these rates were at their top. Obviously, that was the highest that we've seen ever, but now they are starting to drop big time. And good news for people who are wanting to get into the market. And you can see here, at the same time, the big untold story in Canada is surging wage growth that's now at effectively 25-year highs outside of the pandemic, along with a household savings rate that's now at effectively 30-year highs. So you can see here, in terms of average weekly payroll earnings, we are starting to gather steam here, and we are at nice levels here in terms of being able to have that increase on that baseline for your wage. And then the savings too. These are two things that are massive when it comes to purchasing a home, or if you're looking to upsize as well. The more you can save, that gives you more confidence in the market to sell your property, take in some equity, and upsize. So these are all signs here that show the market will come back. And if you are a buyer and you're seriously thinking of buying, this is a great soft spot. I've highlighted in previous videos the housing shortage that we're going to see in the next 3 to 6 years because construction has stopped. It's not keeping up with demand. And everything that we went through today in terms of buyers' intentions in the back half of 2024, they still have those goals. And we can see that the longer that they wait, the more that they're saving, the more that it's going to get them closer to that goal. So if you're one of those people who are saving and are ready to jump the line and get in front of everybody, book that discovery call with me. My call link is in the description below. Let's strategize your goals and get you into a great value purchase, because for any of you who are getting in when the market is soft, in the next 3 to 6 years, you're going to see some great appreciation, and we can go over those charts on that call as well. My name is Kyle Mark, your Vancouver Realtor. Thank you, and I'll see you on the next one.